If you walk into any coffee shop in Palo Alto or San Francisco right now, you will hear the same conversation. You will see bright young founders pitching venture capitalists about the future. They are talking about artificial intelligence models that are smarter than Einstein. They are talking about fleets of autonomous electric vehicles that will eliminate the need for car ownership. They are talking about digitizing the entire human experience and uploading our consciousness to the cloud. It is a seductive vision. It sounds like a utopia where potential is infinite and constraints are a thing of the past. But there is a problem with this vision. It is a fatal flaw that none of the pitch decks mention. It is the one thing that the software engineers and the futurists have forgotten. None of that magic works without the wire. You can print code, you can print money, you can even print digital assets, but you cannot print copper. And right now, the entire global economy is sleepwalking into a physical wall that no amount of software can fix. We are not hitting a financial wall. We are used to those. When we hit a financial wall, the central banks just lower interest rates and print more money to grease the gears. But we are hitting a geological wall. The digital age is built on a physical foundation of copper wiring, and that foundation is cracking under the weight of our own ambition. We have built an economic model based on the idea of infinite exponential growth. We assume that every year we will have more computing power, more energy, and more devices. But we are about to collide with a planet of finite resources. The everything bubble, the stock market, the tech sector, and the green transition is about to collide with the nothing left reality. This is the story of the copper supply cliff. It is not a story about trading commodities or looking at charts. It is a story about physics fighting finance. And the rule of history is very simple. When physics fights finance, physics always wins. Why is copper so important? Because it is the only metal that conducts electricity efficiently enough to power our civilization. Silver is better, but it is too expensive. Gold is too rare. Aluminum is too inefficient and dangerous for many applications. Copper is the Goldilocks metal. It is the nervous system of the modern world. Every time you flip a light switch, every time you charge your iPhone, every time you send an email, you are using copper. It is the physical bridge between energy and work. Without it, the grid goes dark, the EVs stop moving, and the AI data centers shut down. For the last 20 years, we have taken this metal for granted. We assumed that because it was always there, it always would be. We treated the earth like a vending machine. You put money in, and resources come out. But the vending machine is empty. For the last decade, Wall Street has been obsessed with the intangible economy. They told us that data is the new oil. They told us that the biggest companies in the world, Apple, Microsoft, Google, need physical assets to grow. They just need code and users. This narrative worked while interest rates were zero and resources were cheap. But that era is over. We are entering a new era where the scarcity is not in the software, but in the hardware. The AI revolution is not just about code. It is about massive, power-hungry data centers that require miles of copper wiring for power transmission and cooling. The green transition is not just about politics. It is about replacing a fuel-intensive energy system with a metal-intensive energy system. We are currently standing at the edge of a cliff. On one side is the demand for the future we have been promised. On the other side is the supply that geology permits. The gap between them is not just a rounding error. It is the largest supply deficit in human history. When the market finally realizes that we physically cannot execute the plans we have made, the reaction will be violent. It will look like a panic. Not a panic to sell, but a panic to buy. A panic to secure the raw materials necessary for survival. The invisible wall is here. We have hit it, and for the first time in history, the price of the future is going to be determined not by the central banker with a printing press, but by the miner with a shovel. And right now, the miner is telling us that the cupboard is bare. Let's stop talking about narratives and start looking at the math. Because when you actually run the numbers on the green transition and the AI revolution, the results are absolutely terrifying. The International Energy Agency, the IEA, estimates that to meet the goals of net zero by 2050, that means building all the wind turbines, solar panels, EV batteries, and grid upgrades that the politicians have promised we need to mine more copper. In the next 25 years than we did in the last 5,000 years of human history combined. Let that sink in for a second. Think about the Roman Empire. Think about the Industrial Revolution. Think about the electrification of the entire planet in the 20th century. We have to do all of that and then double it in a single generation. Why is the demand so high? It comes down to intensity. An old internal combustion engine car, like a Toyota Camry, uses about 40 to 50 pounds of copper. It's mostly for the starter motor and the wiring harness. It's negligible. But a battery electric vehicle? A Tesla Model Y? That uses nearly 200 pounds of copper. It's in the motor windings, the battery interconnects, the inverter, and the high-voltage cabling. That is a 400% increase in material intensity per unit. Now multiply that by the goal of replacing 1 billion cars on the road. The amount of copper required is astronomical. It exceeds the known reserves of the entire planet. But EVs are just the appetizer. The main course is the electrical grid itself. The United States electrical grid is a relic. Most of the transmission lines and transformers were built in the 1960s and 70s. They are 50 years old, nearing the end of their useful life. They were designed for a world where power flowed one way from a big coal plant to your house. They were not designed for a world where power flows both ways, from solar panels on your roof back to the utility. They were not designed for the intermittent surges of wind energy. To make the green transition work, we have to effectively rebuild the entire grid. We have to double the length of transmission lines in the U.S. Do you know what transmission lines are made of? Aluminum and copper? Millions of tons of it. And we haven't even talked about AI yet. A standard Google search uses a tiny amount of electricity. A ChatGPT query uses 10 times as much. As these models get bigger, their energy consumption is going vertical. Microsoft and Amazon are building gigawatt-scale data centers. These aren't just buildings. They are industrial power plants. They require massive copper bus bars to handle the current. They require liquid cooling systems often piped with copper. They require backup generators and substations. We are trying to plug the entire global economy into a socket that doesn't exist. We are adding demand from EVs, demand from the grid, and demand from AI all at the same time. It is a triple peak of demand. The Wealth Whisperer calls this electrifying the Titanic. We are adding massive new loads to a system that is already sinking under its own weight. Wall Street analysts are modeling demand growth of maybe 2 or 3% a year. They are looking at linear charts, but the physical reality is exponential. When you switch a society from burning molecules, oil, gas, to pushing electrons, electricity, you are shifting the burden from the drilling rig to the copper mine. And the math just doesn't work. Even if we opened every known mine on the books today, we would still fall short by millions of tons by 2030. This isn't a tight market. This is a structural deficit. This is a mathematical impossibility. We are entering a period where the shortage of the metal will dictate the speed of technological progress. The politicians can pass laws mandating EVs by 2035. They can sign treaties for net zero, but laws don't mine copper. Treaties don't discover or body. The demand shock is not a future problem. It is happening right now. The stockpiles at the commodity exchanges are already at historic lows. The buffer is gone. We are driving at 200 miles an hour toward a brick wall, and the GPS the market prices telling us the road is clear. But the math says the crash is inevitable. The obvious question that everyone asks is, if we need more copper, why don't we just mine more? It seems like a simple solution. It's how we solve shortages in everything else. If we run out of corn, we plant more corn and harvest it next season. If we run out of oil, we drill a new well and have it flowing in 6 months. But mining implies a timeline that modern economics doesn't understand. Mining operates on geological time, not quarterly earnings time. The average time it takes to take a copper mine from discovery finding the rock to first production getting metal out is 16 years. 16 years. That means if we started a massive crash program to find new copper today, if we mobilized every geologist on Earth, that new supply wouldn't hit the market until the 2040s. But we aren't starting a crash program. In fact, we are doing the opposite. Capital expenditure in the mining industry has been at rock bottom for a decade. Why? Because Wall Street punished any miner that spent money. They demanded dividends and buybacks, not hole digging. So we have checked out of the exploration game, and because we haven't been looking, we haven't been finding. We haven't found a single Tier 1 copper deposit in over 10 years. A Tier 1 deposit is the holy grail of mine that is big, long life, and profitable. They are geological freaks, and we have found most of them already. The mines we do have are getting old. The biggest copper mine in the world is Escondida in Chile. It's been running for decades. It is getting tired. This brings us to the most terrifying statistic in the industry, or grade decline. In the year 1900, when we first started electrifying the world, the average copper or grade was 4%. That means for every 100 pounds of rock you dug up, you got 4 pounds of copper. It was rich. It was easy. Today, the average or grade is falling below 0.5%. We have to dig up, crush, transport, and process 8 times as much rock just to get the same amount of metal. This is the law of diminishing returns. It requires exponentially more energy, more diesel, more water, and more explosives just to stand still. We are running harder just to stay in the same place. This is why supply is inelastic. In economics, elasticity means how much supply increases when the price goes up. If the price of t-shirts doubles, factories in Vietnam run a night shift and supply doubles instantly. That is elastic. But if the price of copper doubles tomorrow, supply cannot move. You cannot speed up the construction of a mine that takes a decade to build. You cannot make the rock richer than it is. In fact, supply might actually go down. As countries panic about shortages, they start to hoard. Look at Panama. They recently shut down the Cobre Panama mine, one of the biggest in the world, because of environmental protests. Overnight, 1.5% of global supply vanished. This is the empty hole problem. The hole where the future supply is supposed to come from simply isn't there. We are relying on paper mines, projects that exist in PowerPoints and feasibility studies, but have no funding and no permits. We are facing a supply cliff. At the exact moment, demand is going vertical. It is the perfect storm. The terrifying reality is that we might have already mined the easy stuff. What's left is deep, low grade, or located in jurisdictions where you can't do business. The politicians think that supply is a switch. The miners know that supply is a dial, and the dial happens to be broken. We are about to find out that you cannot legislate geology. If you think the geology is bad, wait until you hear about the geopolitics, because the copper problem isn't just about rocks. It is about power. It is about who controls the master switch of the global economy. For the entire 20th century, the geopolitical game was about oil. We fought wars in the Middle East. We built alliances. We toppled governments all to secure the flow of hydrocarbons. But the 21st century will not be fought for oil. It will be fought for critical minerals. And in this new war, the West isn't just losing. We have already surrendered. While the US and Europe were debating gender pronouns and ESG policies, China was quietly buying up the periodic table. China doesn't act like a short-term trader. They act like an empire with a 100-year plan. They realized decades ago that if you control the raw materials of the future, you control the future itself. Look at the supply chain. We might mine copper in Chile, Peru, or the Congo. But who processes it? Who turns that raw rock into the usable metal wire? China. China controls approximately 60 to 70% of the global processing capacity for copper. For other metals like lithium and cobalt, it's even higher, sometimes over 80%. They are the choke point. This gives Beijing a kill switch on the Western green transition. We have seen them use it already. Just recently, China restricted the exports of gallium and germanium to obscure metals that are absolutely critical for high-end semiconductors, military radars, and satellite communications. Why did they do it? It was a warning shot. It was a flex. They reminded the US that, while we might design the chips, they own the ingredients. Now, imagine if they did that with copper. Imagine if they declared that, due to national security needs, they were restricting copper exports to the United States. The result would be catastrophic. The entire US manufacturing base would seize up. Ford and GM couldn't build cars. GE couldn't build wind turbines. The grid expansion would halt. It would be an economic heart attack. We have sleptwalked into a trap. We rely on our biggest strategic adversary for the very components we need to power our economy. It is madness. And it's not just China. Look at what is happening in the global south. The era of Western mining companies extracting wealth from poor nations is ending. We are seeing a wave of resource nationalism. Countries from Chile to Peru to the DRC are saying, "This is our rock. We want a bigger cut." They are raising taxes, threatening nationalization, and demanding that processing happens locally. The free trade era of globalization, where commodities flowed seamlessly across borders to the lowest bidder, is over. We are entering an era of fragmentation, an era where minerals are hoarded as strategic assets. Securing a supply of copper is now a matter of national security. The Pentagon is waking up to this. They are realizing that you can't build a submarine or a fighter jet or a drone swarm without massive amounts of high-grade copper wiring. We are moving from a world of just-in-time inventory to a world of just-in-case stockpiling. And when big nations start stockpiling finite resources, the price doesn't just go up, it goes parabolic. The China chokehold is real. They have the smelters, they have the inventory, and they have the political will to weaponize it. We have paper contracts and empty promises. The copper crisis is not just a story about geology or geopolitics, it is a story about a fundamental contradiction in Western society. We are currently trapped in a logical fallacy that is going to break the global economy. I call it the green paradox. Here is the situation. On one hand, we have a political class and a cultural movement that demands a transition to green energy. They want wind turbines, they want solar farms, they want electric vehicles, they want to decarbonize the grid. This is the demand side of the equation. But on the other hand, we have that exact same political class and cultural movement making it almost impossible to dig holes in the ground. They want the fruits of the mine, but they hate the mine itself. Let me give you a concrete example. The Pebble Mine in Alaska. It is located in the Bristol Bay region. Geologically, it is one of the greatest copper deposits ever discovered. It contains billions of pounds of copper, gold, and molybdenum. Developing this single mine would solve a huge percentage of America's domestic supply deficit. It would reduce our reliance on China. It would create thousands of high-paying jobs. But for 20 years, it has been stuck in regulatory purgatory. Environmental groups, local activists, and the EPA have blocked it at every turn because they are worried about the salmon potential impact. Now, I am not here to argue whether the salmon or the copper is more important. That is a value judgment. But I am here to tell you the economic consequence of that choice. You cannot have it both ways. You cannot ban mining in your own backyard and then demand a green revolution that requires millions of tons of metal. It is a cognitive dissonance that pervades the entire West. We have outsourced the dirty work of mining to the Third World for decades. We let China and Africa dig up the rocks while we focused on designing apps and trading derivatives. But now, we are demanding a physical transformation of our infrastructure that requires us to get our hands dirty again. And we have forgotten how to do it. The permitting process in the United States and Europe is broken. In Canada, it takes an average of 15 years to permit a new mine. In the US, it can take 20. We are trying to fight a climate emergency on a timeline of decades. The result is structural underinvestment. Mining companies are not stupid. They see the writing on the wall. Why would they spend billions of dollars exploring for copper in the West when they know that government will likely block the project before they dig the first shovel of dirt? So they don't. They give the money back to shareholders as dividends. They shrink. They liquidate. We have effectively starved the old economy, the economy of atoms and stuff of capital, for 20 years. We starved it to feed the new economy, the economy of bits and bytes. And now, the new economy is realizing that it can't survive without the old economy. The green paradox is this: to save the planet, we have to tear it up. To move to a clean energy system, we have to accept the dirty reality of industrial mining. Until we accept that trade-off, the supply of copper will remain artificially constrained by our own laws. And the price will punish us for our hypocrisy. So what happens when an unstoppable force of demand meets an immovable object of supply? What happens when we need to double copper production but we haven't built any mines? The answer is found in the price. The price has to explode. Goldman Sachs, the vampire squid of Wall Street, has recently come out with a forecast. They are calling copper the new oil. They believe the price needs to go to $15,000 a ton just to incentivize new supply. That is a 50% increase from where we are today. But I think they are being conservative. I think they are modeling a rational market. But commodity markets in a shortage are not rational. They are violent. When a critical commodity runs out, price discovery breaks. The price doesn't just go up a little bit, it goes vertical. It goes to whatever price is necessary to kill demand. This happened to nickel in 2022. It happened to natural gas in Europe. If copper doubles or triples in price, think about what that does to the global economy. Copper is in everything. It is in the motor of your car. It is in the wiring of your house. It is in your refrigerator, your air conditioner, your phone, and your laptop. If the price of the raw material skyrockets, the price of the finished good must go up. This is the hidden driver of the next wave of inflation. For the last 2 years, the Federal Reserve has been fighting inflation by raising interest rates. They are trying to crush demand to bring prices down. But Jay Powell cannot print copper. Raising interest rates does not discover new ore bodies. In fact, it makes it harder to build new mines because the cost of capital is higher. So we are entering a doom loop. We have a shortage of stuff. The shortage causes inflation. The Fed raises rates to fight inflation. The high rates prevent us from building the mines needed to solve the shortage. So the shortage gets worse. And the inflation gets worse. They call it greenflation. The transition to net zero will arguably be the most inflationary event in human history. We are trying to rebuild the entire industrial base of the world using materials that are scarce and expensive. The days of 2% inflation are over. The days of cheap goods from China are over. We are entering an era of cost-push inflation, where the cost of the physical inputs drives the price of everything. The physical world is reasserting its dominance over the financial world. You can manipulate the price of a stock. You can manipulate the value of a currency. But you cannot manipulate the price of a commodity that doesn't exist. If you need the copper and I have the copper, you will pay me whatever asking price I demand. And right now, the asking price is about to go through the roof. This crisis creates the greatest investment divergence of our lifetime. It is a tale of two markets. On one side of the ledger, you have the users of copper. These are the tech darlings: NVIDIA, Microsoft, Tesla, Apple. These companies are priced for perfection. They trade at massive multiples of earnings because the market believes their growth is inevitable. But their growth is dependent on access to cheap, abundant power and materials. If copper doubles in price, or worse, if they simply cannot get the copper they need to build their data centers and cars, their margins collapse. Their growth stalls. They are the short in this trade. On the other side of the ledger, you have the owners of copper. These are the mining companies: Freeport-McMoRan, Glencore, BHP, Southern Copper. These companies are priced for bankruptcy. The market hates them. They are dirty, they are cyclical, they heavily discounted. This valuation gap is historic. The ratio of the S&P 500 to the commodity index is at a 100-year high. That means financial assets have never been more expensive relative to real assets. But history moves in cycles. We are currently at the turning point of a massive capital rotation. The 2010s were the decade of software. The 2020s will be the decade of hardware. The smart money is already moving. We are seeing massive M&A activity in the mining space. The big guys are eating the small guys because it is cheaper to buy a rival on the stock market than to find a new mine in the ground. So, how do you position yourself? The strategy is simple, but it requires patience. You want to own the bottleneck. You don't want to own the company that is desperate for the resource, like the EV maker. You want to own the company that controls the resource. Look for the pure play copper miners. Look for the companies with mines in safe jurisdictions, places where the government isn't going to seize the assets tomorrow. Look for the royalty companies that finance the mines in exchange for a percentage of the metal. They get the upside without the operational risk. This is a classic revenge of the old economy trade. The market has spent 10 years chasing the companies that build the digital world. But in a resource-constrained world, the most valuable asset is the rock, not the code. Capital is like water. It flows to where it is treated best. For 10 years, it flowed to tech. But now, it is flowing back to the base of the pyramid. And the base of the pyramid is commodities. The digital age is massive illusion. We walk around staring at our screens, thinking that the cloud is made of magic. We think that information travels through the air on invisible waves. We think that the economy is just numbers on a spreadsheet. But the cloud is not made of magic. It is made of aluminum, silicon, steel, and copper. The invisible waves are broadcast from massive towers connected by thick cables. The economy is not numbers. It is the transformation of energy and matter. We have neglected the physical foundation of our society for too long. We let our infrastructure rot. We stopped digging for resources. We demonize the industries that make modern life possible. Now, the bill is coming due. The foundation is cracking. We are waking up to the reality that we are running out of the raw materials needed to sustain our way of life. It won't just be copper. It will be lithium, cobalt, nickel, uranium, and even oil. We are entering an age of hard limits. The era of abundance is over. The era of scarcity has begun. The shortage is coming, and it will reshape the global economy. It will define who wins and who loses. The countries that have the resources will be the new superpowers. The companies that own the ground will be the new titans. Those who understand this physical reality will prosper. They will see the inflation coming and position themselves in hard assets. They will own the things that cannot be printed. But those who stay trapped in the digital illusion, the ones who keep 100% of their wealth in paper currency and tech, stocks will be left wondering why everything has become so expensive. They will be the victims of the great electrification lie. The choice is yours. You can keep looking at the screen, or you can look at the ground beneath your feet. That is where the real value is hiding. The shortage is inevitable. The panic is optional. Position accordingly. I'm the Wealth Whisperer. I'll see you in the next one.